Earnings season, it starts tomorrow with Alcoa reporting second quarter results. And here to talk about the upcoming slew of earnings numbers coming out and what they may say about economic recovery is Wall Street veteran Laszlo Birinyi, president and founder of Birinyi Associates. And he joins us from his office in Westport, Connecticut, and also a familiar face on our program. Laszlo, great to see you again.
Thank you, Betty.
Now, you say, I believe you say that earnings estimates are turning more positive. What do you mean by that?
Well, first of all, it's a mechanical issue because General Motors has been taken out of the S&P. So you get a little bit of boost there because it obviously is a fairly significant loser. But we've seen earnings estimates go from about 57.5 to 58.5 for the S&P 500 for this year. And we've seen it across 5 or 6 sectors. So analysts, for the first time in 12 months, are actually raising instead of cutting estimates. And the good news is they're doing it recently, which means they're really sort of on top of the situation. They're not lagging by weeks and weeks as they did over the last couple of months.
Is that evidence then, Laszlo, that the economy is turning around or that it's recovering?
I think a lot of companies have taken actions to get their costs under control. They've cut back on employment, unfortunately. And I think the economy, I would think most people think the economy has indeed made a bottom with perhaps a sluggish and stalled recovery. But the general consensus is the worst is behind us, and I don't really like to fight the consensus.
Sure. Well, then, Laszlo, does that suggest to you that in the second quarter here, if we are going to get any surprises, that the chances are those surprises could lean more to the upside?
Absolutely. The unfortunate element, and maybe this has changed too, is that we no longer stop with earnings. We now also look at revenue, we look at sales, we look at margins. So even though the earnings per se may show some improvement, it's also important that the secondary numbers and the guidance show it as well. You know, historically it hasn't always been this way. In fact, one of the great quotes that we found in our historical research was in the early 70s, a Boston broker told the Wall Street Journal that these institutional guys, they're not interested in 5-year forecasts anymore. Some of them went quarterly numbers. Years ago, we were long-term investors. Now, unfortunately, we're all traders.
Yeah, we have. We talked quite a bit about that, Laszlo. Then in that sense, okay, so given all that you've talked about, in recent weeks that we've seen instability in the equity markets, we've seen some people saying, is this the beginning of the end of the rally that we've seen? So if what you're saying is that earnings are going to be more positive, we're seeing more of an economic recovery, what does that mean for the markets? And this rally has more legs to go?
I think the market's going to continue to struggle in a positive direction. I think the market's going to continue to have a great deal of volatility because there's just so much uncertainty all over the world. But our view is the market will end higher at the end of the year, and we're constructive. We think it's interesting that very, very few people have called this a bull market. Even those who are positive have a lot of caveats and cautionary phrases attached to their forecast. Actually, I think that's probably good for the market. And so, therefore, we're sort of the view that the market's going to do better.
Right, Laszlo, you have been one of the few people who has called a bull market and called it early. In that sense, for the second half of the year, what do you think is going to drive us higher?
I think earnings and the realization that things are going to do better. With the governments of the world are addressing their issues. I think companies have cut any fat that they have. And I think that the actions going forward are more likely to be positive than negative.
Okay, Laszlo, we'll talk more about that in a little bit. We'll stay with Laszlo Birinyi to talk not just about the economy, but also about where in the stock markets you may want to buy right now. So we are back with Laszlo Birinyi, who has more than 3 decades of experience on Wall Street. And I've been talking to you long enough, Laszlo, to know that whenever I ask you, at least in this market, what is a good thing to buy? What's good to buy here? Your response always is, look, everything's going up. So in many ways, any kind of strategy works in this market. Has that changed at all, Laszlo?
No, it really hasn't. We still haven't sorted out the real leadership. I guess small and beat-up stocks, if anything, but I think for most people those are probably inappropriate.
Well, then, when do you see that dissipating, though? When do you think that that's going to start? When's the differentiation going to start in this market?
I guess maybe when the economy starts to really show some signs, whether this is just going to be a government-driven economy, whether the consumers are going to come back, whether corporations are going to increase their capital spending. And I don't think that that's been clear yet. So even though we may think the economy is going to do better, we're not sure what's going to be the driver of the economic growth.
Okay, well then what could spoil the rally or the bullish scenario that you see, let's say, in the next 6 months?
Well, obviously, if earnings don't come through, if we continue to see a rise in commodity prices at the same time that we're printing money and inflation really becomes an issue, and if the economy stalls, and we get a couple more bad numbers. I mean, the day before the employment data came out, we had three numbers, all of which were positive. So it's still not clear as to how strong the recovery will be.
Okay, and Laszlo, I want to end on earnings because that's what we talked to you about in the beginning. In terms of earnings, some are saying that we're not seeing true earnings right now because it's just cost cutting. When are we going to see top line revenue growth?
Well, I think you're seeing it. I think if you look at the companies, where forecasts have been raised. I mean, the S&P company, which has had the greatest change in the last 4 weeks, is Goldman Sachs, and their earnings revision is not a function of top line growth.
Okay.
And the energy stocks have also had their numbers raised.
Laszlo, we've got to run. Thanks so much for joining us. Laszlo Birinyi, and we'll be back with more on Bloomberg News.